Thanks to radical reforms and new policy initiatives, the financial inclusion movement has acquired a new urgency. We have policy makers, regulators, and thought leaders discussing strategies to accelerate the pace of inclusion.
It's an absolute pleasure to be here on this panel and to be able to get a cross-section of views from the government, view from the World Bank, so we can understand what international best practices have been all about in this space. Of course, we have a banker amongst us as well, because that's where it all starts, financial inclusion, how to include people in the mainstream. Perspective from Crystal and Dr. Joshi, and of course, Fino, people who are doing it at that grassroots level. So gentlemen, thanks so much for being here this evening. Sir, let me start with you. The last 6 years, the journey that has been covered, whatever ground has been covered, through the banking correspondent model, through other models, what is financial inclusion for you? Is it a mandate that is to be followed, or is there a different approach that's building in?
See, when we started off in 2007-8, I think bankers really did not perceive the benefits of financial inclusion. At that time, we all thought that it is one of the mandates. But over a period of time, I think there is a lot of awareness that has happened in the banks also. That now banks are looking at it more as a business opportunity rather than as just a mandate from the government. Initially, the banks were required to cover villages up to 2,000 population, which we did that. I think almost about 74,000 villages have been covered under this scheme. When we were asked to cover villages below 2,000 in the June monetary policy of Reserve Bank of India, the bank started doing the groundwork for covering villages below 2,000. I think the state level bankers committee was asked to prepare a roadmap for bringing all the villages under that. Now I think the thrust that the government is giving to extend the benefits through the bank accounts, I think is going to put greater thrust on the financial inclusion.
But is it, sir, a viable, interesting enough business proposition for a bank right now?
Initially, yes, the KYC requirements for opening a bank account were stringent. But over a period of time, I think there has been a lot of relaxation in the documentation for opening a bank account. Then the documentation could be as good as somebody in a village. Even if somebody can introduce him, that is taken as an introduction and a KYC is accepted. When we talk of viability, I think banks are very clear that this is going to be an investment for another 5 years. We are not expecting any return from this business activity for the next 5 years. We are seeing this as another revolution next to what happened when banks were nationalized in 1969. Banks have opened branches in rural areas. So we see this as a second revolution. And with the thrust that is being given by the government on transferring benefits to that, I think it's a question of another 2 years that perhaps everyone will be able to have a bank account.
This whole buzz that has been created about direct cash transfers, subsidy mathematics itself is supposed to change in an ideal situation. Where are we? Is it a long pipe dream right now, or are we moving towards the journey?
Government is fairly committed that the funds should be transferred to the ultimate beneficiary in as transparent manner as possible. So if you have the channels, or if you put through the channels through which this fund can flow transparently to the beneficiary, first it benefits the beneficiary, the leakages are brought down, and it encourages some thrift in those people because the money reaches them. And that is where the banking system also has to evolve. It is evolving. If you look at what has happened in the past 5 years and compared to what happened in the previous few decades, it's a sea change. To my mind, the most difficult part will not be the intention of the government, which is already there. The most difficult part would be evolving communication modules to reach out to these beneficiaries or ultimate beneficiaries to educate them about it. The ultimate user has to understand the value proposition in the proposition that I am making to him. So that's going to be the real challenge, and I think the practitioners will have to work on it.
We seem to be at a point of inflection here in India where there are different models, sort of different programs that are being spoken of, the Aadhaar and the UID, what is happening through banking correspondence already. Some people talk about mobile as a means. What is it that you've seen in your international experience?
8 years ago in the Congo, we needed to pay 100,000 ex-combatant soldiers who actually lived in the bush in the Congo. And we used a combination of smart card-enabled biometric cards with cell phone technology, not internet, to check back into databases to establish eligibility. It worked, people got the benefits, nobody ever complained. What is financial inclusion to us? If you lift people out of poverty, that's great. The question is how to prevent them from falling back. That means they need a bank account, they need insurance, they need credit, they need financial inclusion. What is missing in the revolution to me is really the deep understanding that the combination of the human element that the correspondents are with technology can be much more powerful than people think it is. And I would like to illustrate that by one simple fact. I think all of us in this room know people who do not know how to read and write on paper, yet use their cell phones to text. Technology is really transformational.
The point that he just made, that financial inclusion perhaps could be a tool or could be some kind of a link with poverty alleviation itself, and then that also brings in the whole government aspect of subsidies and the direct cash transfers that we're speaking of right now. So where are we in the cycle? I think we're all in that sphere of trying to figure out where this is moving.
I think this is finances, as we say, is the financial sector is lubrication for the system. I think you need brick and mortar activity also, so you need development to happen. So this is one cog in the wheel which will make elimination of poverty more quicker. It can't in itself, it can't be an end in itself. So I think you need to dovetail it with other activities also. There have to be jobs, people have to be skilled for jobs, then they'll generate incomes, and then I think they'll use the financial system for savings, for investment, for other financial products, credit, etc. So I think then it becomes a virtuous cycle where you have the sum as much more than the overall sum is much more than the individuals taken together. Financial inclusion also happens side by side, and we have more opportunities, job opportunities come up, then I think it will become a virtuous cycle and a win-win for everybody.
Manish, 6 to 7 years of going forward with this very big and very important experiment. Give us one or two of the highlights where you really see things in motion, and maybe one or two of the biggest challenges that you think are immediate roadblocks that have to be dealt with.
We have acknowledged to say that the physical way to deliver to the customer, which was the branch-based model, may not be adequate, may not be able to scale that fast, and is an expensive way. So we are trying an alternate way, which is based on an agent going out and delivering to the customer. Over the last 6 years, we have all as an industry reached out to some 100 million new customers who are not already banked, and put in the perspective of that the market was, or the access was only to 200 million customers. It's a big achievement in the short span. And across the wide range of products, not just one single government payments or remittances, but saving, credit, insurance, everything put together. So it's a very deep model in terms of the products as well. In terms of challenges, if you ask me, the sheer continuum of the approach, I think, is the biggest requirement that we have on this sector. And anytime we try to change the direction without looking at what has already been done, that causes the harm.
Issue of multiplicity, and let me ask you this. For example, the health insurance scheme that we're talking about, there's a smart card for that. Now, another smart card for financial inclusion, for taking care of financial transaction. Perhaps another biometric card, which would be an Aadhaar card. Isn't there too much of duplication of effort happening here?
I totally agree with you. There shouldn't be duplication. There should be one single platform on which everyone should ride. But it is evolving. The country will have to take a call at some point in time. What will be the front-end architecture? What will be the back-end architecture? There could be a back-end architecture, but the front-end will have to correspond to that back-end architecture. If you have multiple architectures sitting on the front-end, everyone is going to get confused. Now, while choosing a particular architecture where everyone should ride, we have to see what is most feasible, what is most sustainable, what is most viable. These are the questions that will have to be answered for it to scale. It is easy to talk about pilots. We are very fond of talking about pilots. Unfortunately, in India, the pilots don't fly, literally and otherwise. So we have to look at models that are sustainable, that are viable. And sustainability is the key. And RSBY is sustaining because it is a business model where every stakeholder has a business interest in doing what it ought to do. And as it happens, it's an autopilot, not a pilot.
What else you think financial inclusion can do or needs to do? We're talking about selling insurance, more sophisticated financial products. Is that a realistic scenario in a situation where we're talking about below poverty line households and largely illiterate and financial illiterate population?
I think financial literacy is the most important thing before we can really get into that. People do not have even basic knowledge about financial products. So there is a lot of groundwork to be done in terms of educating them as to what they can get from the bank and then how their livelihoods can improve out of that. I think that is the fundamental thing that one needs to be done. In the entire banking system today, by just opening these accounts, we have been able to get 12,000 crores of deposit as of now.
12,000 crores.
12,000 crores. It is by no means a small amount.
Absolutely.
But now I think the focus of the banks is that we must lend to them, because then only the earnings of the bank will start from this activity. So I am sure this will also pick up. And thereafter, I think selling of insurance products will happen. But then that requires educating them up to the need for insurance, the benefits that they will get out of insurance. So I think the financial inclusion will be successful provided we are able to create financial literacy amongst the people.
Manish, if you could come in on this, what are the questions at that grassroots level now? What are people asking for beyond just a simple benefit transfer?
We have seen banks look at this business for three broad objectives, which could be different or concurrent as they go around. One is compliance. Simply, I won't say there are formal objectives, but there have been guidance over the years that banks have got to provide banking services to poor people. So over the last 6 years, if you will see, most of the no-frill accounts banks have opened using the business correspondent as an architecture. It's cheaper, it's more convenient to the customer, and process-wise also and reach-wise also. So it solves the customer problem. So large number of accounts have been opened, and of course, consistently, government has found good usage of these accounts to provide benefits to the poor people. The second objective we have seen banks use is to migrate the customer from expensive or inconvenient current channel, physical branch, to this new channel. So two products, I would say, remittances and SHGs or self-help groups have found the biggest traction in these objectives. So banks have actively migrated these current set of customers who were already banking with the banks to this new channel.
From the international market point of view, and some of the issues that we're discussing here, how will this be regulated if you open up the market completely? Is there some threat of perhaps misuse or abuse? What have you seen in other parts of the world?
Well, it is really important to make sure that you understand that if you go to different types of financial institutions, you need different regulations. Microfinance institutions, we all know, need different regulations than banks, insurance companies, etc. The key is, I think, to work with institutions like RBI and other regulators to understand that they need to get comfortable with the fact that less traditional institutions will also enter the market and learn how to deal with them and regulate them, and not be afraid and say, this doesn't look quite like the bank I'm used to, so therefore it doesn't work. The Central Bank of Kenya regulates effectively Vodafone. It's called Safari, there's two there, but they're dealing with a cell phone company. But at the back end, they have a banking license. They can be regulated just as well. That takes a leap of faith from the perspective of a central banker. It's the kind of leap of faith that is necessary. Just like we needed to understand that regulating a big bank or an investment bank or a microfinance institution is not the same paradigm. The knowledge as to how to do that is there in the international markets. The trust for individuals to actually venture there needs to be built.
Okay. Sir, what do you see ahead in the coming, let's say, 1 or 2 years? How will this all flow through? Because you're sitting there where decision making is taking place, where different voices are talking, and
No, I think the roadmap is absolutely clear. The government is very clear in its mind that henceforth all funds to the beneficiary will flow through the banking channels. That's very clear. For this, of course, there would be a need for rebuilding the infrastructure, creating further infrastructure. But the fundamental intention is very clear, that the funds, the cash should flow, though it is called cash transfer. The cash transfer should happen through the banking channels. This brings about transparency because you can account for everything, who's getting it. This also leads to the identification of an individual that you made. You can have a cash transfer, but it goes to the wrong person. So you have to have a clear identity. Now it is assumed that if a person has a bank account, as you were saying, then the identity is clearly established. They have done the due diligence and they've given this account. So it goes hand in hand, opening up bank accounts, funneling this funds through the banking channels. This creates a different psychology at the level of the individual. So far, somehow, he was getting this money from some channel. But now he understands and recognizing that there is something called a bank through which I am getting this money. And that can thereafter be leveraged for a variety of other services that can be offered. So I think we are moving ahead in that direction. As more and more bank accounts, starting with all the benefits, the huge number of benefits that are being delivered by the government, reaching out to the people who don't have a bank account, don't have financial inclusion, so to say. So you are reaching out to them. That in itself will be some sort of an education to them.
Addressing the Financial Inclusion Summit, Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia, shares the vision.
Perhaps one of the biggest reforms that your government has stayed committed to has been the whole Aadhaar cash transfer, the whole mechanism, and we are probably reaching the last leg of it, where a lot of the work in terms of enrolling people has been done, and we're probably now going to start seeing the inclusive growth that you talked of, Dr. Ahluwalia. How would you explain that in the context of financial inclusion for the country? You've been somebody who's seen the institution and the development of it over the last 2 decades. We don't seem to have made much headway, take away this recent effort. But on the whole financial inclusion bit, more specifically on this, how do you see the scenario building?
No, it's a very good question. I mean, I do think that the government's decision to roll out beginning January 1, I mean, we say January 1, but what we've said is that, beginning January 1, in something like maybe 34, 35 districts, it could be a little more, for about 25 government schemes, we will actually be transferring the money electronically in bulk in a nanosecond. Now, in my view, this is hugely important. And it's hugely important because it's a proof of concept. We're not going to start with the moving from the delivery of subsidized commodities to delivering the benefit through some kind of a cash transfer or electronic credit to start off with. But we want to essentially put a large number of existing programs on what I call an Aadhaar-enabled bank transfer. I want to sort of clearly indicate what we're doing. Let's take any individual scheme. There's a list of beneficiaries eligible for that scheme. So district by district, and this will be done scheme by scheme, the list of beneficiaries has to be digitized. So it's got to be available in digital form. In addition, we need, as the jargon they use is, we need to seed this list with an Aadhaar number and also a bank account. Now, district collectors will organize camps where maybe Gram Panchayat by Gram Panchayat, they've got the list of beneficiaries. They'll find out, do you have an Aadhaar number? Now, since this is being done in districts where Aadhaar penetration is quite high, the probability is many of them will. But remember, we're not interested in whether 100% of the district is enrolled, but we do want 95% of the beneficiaries to be enrolled. And even if they're not, that's very easy to get done because you're dealing with a defined list. When that is done, I mean, then they've all got Aadhaar numbers. Parallel with that, they will actually get a bank account through a business correspondent who will be there. And I think RBI in the last 24 hours or 48 hours or something has in fact made it amply clear that anybody with an Aadhaar number, which could actually need not even be certified by the actual production of a card, it could be certified by an electronic KYC. So you could have a situation where you've got enrolled, they've recorded your biometric, you haven't yet got your card, but by electronic conveyance to the business correspondent that yes, this guy is enrolled and this is his number, you can actually get yourself a no-frills bank account. Now, if we succeed in doing that, what it really means is that the government will make the payment to a common sort of Aadhaar payment gateway, okay? So money corresponding to what is due to the list of beneficiaries will get transferred to this Aadhaar payment gateway, which will then move it to whatever bank account the beneficiary has indicated. Now, in that payment gateway, other benefits would go to the same bank account. I mean, an individual could have 6 bank accounts, but for purposes of receiving benefits, he would indicate which is the bank account with which he wants the payment gateway to be seeded, and that will be the same for all the different benefits. You know, and linked to this would not make too much, wouldn't be such a huge advantage if the business correspondent revolution hadn't happened. Because, you know, if I'm a sort of ordinary person with a bank account and the bank branch is 10 kilometers away, 15 kilometers away, it doesn't help very much to know that I've got money into my bank account. Because how do I get the cash? I'm certainly not signing checks and giving them, and it's very difficult to go all the way to the bank to draw cash. And that's where the business correspondent model is supposed to make all the difference. Because the guy goes along and sort of says, look, this is my bank account number, and I'm so-and-so, and here's my thumbprint that proves it. And I'm now transferring via your we've got a lot of those machines out there, I'm transferring 1,000 rupees into your account, and will you please give me 1,000 rupees in, you know, as the other leg of the transaction. And basically, not only would this happen without having to go to the bank, but this same person could do it anywhere in the country, because these are all interoperable. I don't have to go to the business correspondent in my village. If I'm visiting someone else and there's a business correspondent there, maybe a business correspondent of a completely different bank, I can still use this interoperable system to get cash out of my bank account. Now that is huge. And by the time it's really rolled out, because we'll start with a few scholarship-related schemes, etc. But when it gets rolled out to Magnarega payments, national social assistance, and in due course, move the kerosene subsidy to a cash sort of system, the number of people that will actually have accounts in banks and will be operating them will be enormous. And I don't think there'll be any other country in the world which in so short a time would have enrolled so many people directly into the banking system, basically because large sums of money which at the moment go out in a very decentralized way will be going out through this common method.
Right.
There is a clear consensus among the policy makers and business leaders that to achieve a satisfactory level of financial inclusion, our country will need more resources, ideas, and a common pledge. I pledge to contribute to the success story of my country, that soon there will be no one left behind. I will not stop. I will not rest. I pledge to ensure 100% financial inclusion. The capital city is leaving no stone unturned in our country's quest to achieve 100% financial inclusion for all our citizens. Our next stop is the state of Uttar Pradesh. We'll find out the people and change agents driving this financial inclusion movement.